All right, good morning, guys. Happy Saturday to you guys. Wanted to drop a video on Elliot Wave this morning. I haven't done one in a while, and I think I should get back into it. Just kind of pick up the education once again. If you are brand new to the group, if you check the Dropbox link in the group chat, there's all these videos I've done in the past on Elliot Wave theories and other educational videos. I got a few requests for EMAs, etc., and all of that is in the Dropbox. So if you're brand new to the group, please use the Dropbox and the Google Links that has PDF books for free. So feel free to use it. It's part of your membership, and you have pretty much lifetime access to it as long as you have the link, right? And all that I just charge for 79 bucks a month. Anyway, all right. So I'm just trying to do some homework this morning, and while everybody's asleep, see what the hell is going on in the market. Where are we going? So if you're looking at my chart here, I have the QQQ 1 hour chart. The reason I'm using a 1 hour chart this morning is the run up from QQQ 318 has only been the last several weeks, right? So we need more data than daily candlesticks. So I'm going to use a 1 hour chart to kind of show you where I think by applying the Elliott wave theory and the correctional waves, where this next wave is going and where we can bounce from. So all right, if you are aware of Elliott wave theory, there is five waves in an impulse wave on an upside and three waves on a downside, okay, as a correctional wave. So I'm going to use TradingView. By the way, TrendSpider doesn't have a great Elliott wave tool, so I'm just going to use the Elliott wave impulse wave tool on TradingView. So let's go ahead and just map this out. So there goes. So when we bottomed out at about 317, 318. Okay, so now you have an impulse wave. Okay, now hindsight is always 2020, but this is how it goes. So one, that's a correction wave three, and this is going to be your wave three right about here, and this is your wave four, and you can see that's a kind of a nice diagonal, right? All right, and there is wave five. Okay, so we completed the five wave structure at about 371 on the Qs just a few days ago, right? Well, not a few days ago, a couple weeks ago. All right. So now the Elliott wave theory says the pullback has to occur. And the pullback generally is three waves. So we go back to our charting tool and use the Elliott wave theory, Elliott wave, correction wave ABC. And here we go. So here is your correction A, your bounce from that. Okay, you notice that the B wave here could not beat the wave five, right? So it's right under 370, I think. Okay, and here we go. And C should extend a little bit further down here, and I'm going to say it's going to extend down to 337 area. Okay, now if I am pulling up some images here, now if this is correct, we can call this effectively the zigzag, the 535 move. Okay, so within what they mean by 535 is within each wave A, B, C, there's five wave down, three wave up, and five wave down within that structure. Okay, so this definitely looks like to me so far a zigzag correction before it bounces back to the upside. Okay, if you look at this chart, for the most part, right? I mean, this is going on an uptrend. Okay, it just takes time for obviously the play to the market to figure itself out. But this is what it looks like so far. What now? Why did I choose 337? So what I'm going to do now is that the Elliott wave theory says that wave C, all right, is 161.8 of wave A. All right. So what I'm going to do is actually, I'm just going to do this instead. I'm going to pull up the complete Fibonacci retracement from this area to this area. And 0.618 is right here at 337.30 is where typically we could see a bounce. Now, of course, like I said, this is what the forecast tells us. It may not be entirely accurate. Anything can happen in the news. Obviously, we have CPI next week. But so far, it's working out pretty well because you can see the five-wave structure down, the three-wave structure up. And if I were to do now, if you want to see more candlesticks, I'm going to use the 30-minute chart. And let's see if there is a five-wave down here so far on the wave C here. Let's see. So 1, 2, 3, 4, 5. So Yeah, you can see this gap down, right? This huge gap down. All right, so let's see. No, that's right about here. So you can see I'm doing this live, so 1, 2. So could be one of these type of situations. Okay. So so if this is true, all right, what do we expect this coming days? Well, let's see, CPI data, all right, everybody's expecting bad news, higher than expected, should be a bounce, okay, once the news comes out. So could be a situation where we see probably 343 on Monday, Tuesday, or Monday morning, or I'm sorry, Monday, because the data releases Tuesday morning, right? Okay, 5:30 before the bell. And the data comes out, everybody's happy, not terrible, it's as expected. And then, well, let it complete the wave down to 337. What happens typically after wave C, all right, if this materializes, is that you should start seeing another 5-wave up. And yes, 5-way up should beat 370. And then I'm running out of room, but there you go. Okay. So this looks to me like a complete picture for the next month or so. All right. So again, 5-wave structure up, 3-wave structure down, ABC. All right. Once it finishes correcting, yeah, this looks typical of what happens with CPI. So we're going to hit this area here, 343, bounce up to 349, where now the support becomes a resistance. Okay, 349 has been a resistance or support last couple of days, so this area might be now a resistance. Come back down, and then boom, before we make it to probably back to 380s. All right. Okay, so hope you found that useful. That's the forecast for the